With mortgage rates rising, people want to know what that means for real estate values and sales, especially as we close out the year. Stay tuned to find out. Welcome back, everyone. My name is Robert Carrillo, and I'm an associate broker with eXp Realty. In today's episode, I'll update you on where the market is, especially as interest rates dominate the news. Context and perspective are two terms that I will use frequently. We cannot look at the numbers, statistics in a vacuum. I'm going to start right here with the most recent update from Freddie Mac. Despite the noise around the economy, inflation, and monetary policy, mortgage rate volatility has been low. For most of 2021, mortgage rates have stayed within a half percentage point, which is a smaller range than in past years. And oh, by the way, add to that coronavirus and everything going on in the world, the average 30-year fixed right now is 3.1% as of last week prior to Thanksgiving. I'm going to show you graphically what that looks like right now. Context and perspective are important to consider. Back in 2020, before the pandemic started, rates were knocking on the door of 4%. Then the pandemic hit, and we see this drop when the Fed comes in. Now, the Fed acts, right? They cannot control the mortgage rates, but they can certainly influence them. And they influence those rates to historically low numbers for home financing, somewhere around 2.65% at the low end. And then today, where we sit at 3.1% for the average 30-year fixed throughout the country. Still very, very good financing relative to buying a home. But the word out there, and most people know this, rates are going to be rising in 2022. The Fed talked about the raising interest rates. Now, again, the Fed can't control the mortgage rates, but they hope to influence them. And the overall forecast is that mortgage rates are going to rise. So what's that going to do to real estate across the country, right? That's the question. Is that going to slow home sales? Is that going to slow appreciation? I'll tell you what is going to happen with interest rates. Let me give you a couple of perspectives. First, I think interest rates are going to go back to where they were, in summary, right? In short, right? In an earlier episode, I shared this chart. And if we go back and look at 2016, 2017 through 2019, like the normal years in our business before 2020, which obviously we all know was an abnormal year, right? We were between 3.5% and 5% interest rates. And where we're headed, I think back to that range. And those were good years in real estate, right? We had an incredible 2020 and 2021, but I think we're heading back there in terms of interest rates. And that's my first point, right? Is that these interest rates are going to just go back to where they were not too long ago. And the second one is what do the experts say, right? Well, experts are saying next year's rates will be between 3.2 and 4%. I'm not going to pinpoint the rates exactly, but really the experts, they're the ones who get paid for that, right? But I think it's safe to say that interest rates are heading back to where they were, and the experts are forecasting this right here. Right? You see the average of four forecasters. We got Freddie Mac and Fannie Mae, MBA, and NAR. And it's basically going to cost more to buy a home in the coming year and years than if you were buying right now. So if you've been thinking about buying in the next year or two, this is what it's looking like. If we work together, we can create a plan around even like rent to own so that you reap some of the appreciation benefit to offset the interest rate rise, right? We got to be creative when we talk about real estate now. Look, in another episode, I will dive deeper into the rent to own program that I am developing right now with some folks. I'm telling you, I think it's going to be kind of a game changer. But right now, I think it's better to buy now rather than later, especially over the next few years. And so as we go into and through the winter, right, two questions are going to prevail. Right, the first one is how will home prices be affected by these rising mortgage rates, right? So in order to do that, we have to look at some historical data. All right. And so look at really at the rising interest rate environments, right? Which is what impacts, has an impact on home prices, right? So first, home prices are slightly impacted by mortgage rates, right? This graphic right here goes all the way back to 2000 and takes the interest rate environment there in the yellow and red line compared to appreciation in the bar graph. Now, what always stands out are the years of depreciation during the housing crisis, right? But what we can see in a rising interest rate environment, like it never has, and it hasn't killed the housing market, right? Maybe a slight impact several years, right? You see the first rising rate environment happening in 2005, but it was still appreciation and no depreciation in that and outside of the crash, right? And then the next rising rate environment coming out of that crash of 2008. And in all of that, we see that homes still appreciated nicely, and the same in 2016 and 2017. So anybody that's saying, you know what, like as interest rates rise, that's going to impact appreciation, well, that's only slightly true, right? And so in a prior episode, I talked about what forecasters were saying about appreciation, right? And I introduced deceleration, right? So the experts are predicting that next year will still show a healthy appreciation, right? Not as much as this year, but it's still going to go up. And so it's not as accelerating or not going up as high as these past 2 years, right? And so look, I'll go here with what Mark Fleming said house price appreciation is resistant to rising mortgage rates primarily because most home sellers rather withdraw from the market than sell at a lower prices, a phenomenon we refer to as downside sticky. And that makes a lot of sense relative to the interest rate environment. Right. And now the second question that comes back, and that is, what is the historical impact of rising interest rates on home sales, right? Not the prices, just the number of sales. And so for that, we can see that if we go all the way back to 1989, again, the interest rates in the yellow and red line, that in the rising interest rate environments, as compared to home sales, we can see that home sales are not impacted by rising mortgage rates, right? I won't go through each one of them here, but you see that in each one of the rising interest rate environments, you see home sales growing through those. And certainly the crash of 2008 is going to be the anomaly in all of these situations. But home sales dropped during that time in the rising environment of 2005 to 2006. In all other cases, though, home sales grew. All right. So rising interest rates typically are a sign that the economy is improving, right? Again, the Fed steps in when they think that things are going poorly, but when they start rising, it's because the economy is improving, right? So as the economy improves, more people have the capacity to go out and buy homes, right? So all of this, of course, is at the mercy of coronavirus. And just recently, we've seen with Omicron that just has been announced, the stock market went crazy and the markets are crazy, right? But for the most part, the economy will take the path of what happens to the coronavirus. But I think we've all learned from this last couple of years to get into real estate now. And so remember, right, always that context matters. So back to Mark Fleming, who says, context matters for purchase and demand, or rather for purchase demand. The economy is improving and millennials continue to age into their prime home buying years in large numbers. So the context remains good for the housing market, right? So look, forecasters are expecting higher interest rates, higher prices, rising sales. So the context remains good for the housing market. And already we're seeing the market sort of heat up again in the past couple of weeks, right? So Danielle Hale out of Realtor.com, she came out and said, quote, listings rose for the second week in a row, with our recent survey data suggesting that a growing share of homeowners are potential sellers. Eager to find new homes, there is reason to believe this may be the start of a welcome trend, especially as we move into the colder months. All right. So look, I've spoken with some folks, and in general, people over the last year have put off. Some people have put off their home buying plans because of the pandemic, right? But again, I said we're learning. Everyone is sort of learning how to engage with the pandemic, and so we're seeing more and more people say now that they want to sell their home, especially right to take advantage of the equity that they've gained over the past couple of years, right? So if they want to use that equity to either upgrade or to downsize into a nicer community, those options are now available and people want to take them. So yo, there you have it, right? If you're looking to sell, now is the time. If you're looking to buy, now is the time, right? Kind of crazy, right? But sometimes real estate kind of reaches a happy medium, like some kind of equilibrium. And I don't know if we're dead in the middle of it, but that's what I feel like it's sort of shaping up. So look, subscribe now for more informative sessions like this. Like I hope you're getting something out of these. And then follow me on Instagram and Facebook and connect on LinkedIn. Again, if you haven't subscribed or liked the video, please do so. Peace.